Hello everyone, Artful Engineer here. This video we're going to go over what happened this week, a look back last week and the week before, because our bias 2 weeks ago was pretty much spot on, and last week really was kind of a tricky week, so we'll take a look at what happened. Starting off with the dollar index, we can see on a weekly chart we have had a nice strong push to the upside here, which 2 weeks ago was expected. The week prior we had a down close wicking into this weekly imbalance from 2 months ago, and to be honest, I'll show you, it scared me out of my euro short, and markets do what markets do. They scare the weak hands out, and I'm apparently a weak hand, but my analysis seems to be on. And I did not get back into a euro short this week, but I did short other things, and I longed oil, and we'll see kind of how that played out over the week. But this is the start of what we expected, 3 weeks ago, where the dollar's been consolidating. We had this nice drop down and wick back into the range. So if we're looking at a Wyckoff accumulation, we're coming into the range. We have a show of strength in B, a secondary test, another up thrust. This is the spring, which knocks out the entire range, comes back in, and then we displace higher than the high that created that low. So this is a bullish sign, and now we've kind of dropped back in to fill in this imbalance. We've inverted this fair value gap on the way back up. So this red candle was a bit of a surprise for me last week, but again, we said this could take a couple months to play out. So while we haven't exited this range yet, there's still plenty of opportunities to long the dollar via other avenues, say shorting euro or pound, for example. And we'll see those made substantial moves this week, but there's still room because we're aiming to take out this wick on the dollar at least, and we'll see where we go from there. But we're still in this range, and we've just made a push above halfway. So this is where the things might get a little interesting. I'm going to turn on drawings here for a second. So yeah, last week, unfortunately, I was hoping we'd get a wick down to the 75% of this dealing range. Right, let's zoom in here. I was really hoping to see a wick down here on the CPI number, for example, to reprice this wickless body here, come down, hit the 75% of the dealing range, which would be an extreme discount, wick the bodies, wick these bodies, and also put a little more volume over this gap and then shoot up. That's what I was hoping for. Didn't see that, and actually necessarily wasn't hoping for it, but that would be a very strong signal if we could wick through, hit the 75, and start showing some bullish signs. But we didn't even have to do that. All we did was kind of wick through this imbalance several times, 1, 2, 3, and we closed just at the top of it last week, and so gapped up, kind of filled that in with a wick and took off. So that was kind of the narrative that happened last week. I'm going to turn off drawings before we switch over to the euro. So I still had my alert here at 1.18. It did not get tapped last week, which I really thought it would, and I got scared out of my euro short kind of right at the end of Friday last week. And then, of course, all the news that there was no peace deal, etc. And we gapped down, wick up, still didn't touch that 118 level, and dropped on the euro. So when we put these measurements, we thought last week, based on the close of last week, I was anticipating maybe some higher pricing, maybe to take out this wick and then wanting to see drop. Was going to see how it reacted with the dollar, etc., but we can now delete these as these did not come into play. Alright, so we are still in this dealing range here from the high to the low here, and we've gone and wicked through this gap this was the gap down at the beginning of March, right? And so we've wicked through it, tapped the halfway point, tapped the quarter point, bodied all the way up to the halfway point almost, wicked that body last week, and taken a dump to the downside. So zooming in a bit on a daily time frame here, we had a nice gap down on Monday with a close back near the high there. And we had a nice 4 days to the downside, taking all the sell side liquidity here. And I thought, this looked like a Wyckoff accumulation last week, but again, there was still a potential for this to turn into a distribution, a nice M shape here, right? So we had this high, we had this gap, and we were unable to really get above it, and we started to break down over the week, which was good to see it actually. We did only tap the 618 of the parent dealing range, so there is a possibility here, that this gap continues to hold and we see a quick run up and then a dump. That's a possibility. So on a daily time frame here, what we could be looking at is, it keeps doing this, I want black. We could be seeing a run up to take out that high, and then we could see the real dump happen. Is that likely anymore? Hard to say. This was a pretty strong week. There's not a lot of news next week coming out. So if we are to look at, I'm going to pull this over here. We don't have a ton of news here, but we do have some euro, some pound stuff, not a lot of USD. And so this could be an interesting week to just have a continuation of what we saw last week. I don't think the euro and pound news is going to be enough to pump it up here and go down. So what is more likely is that with our analysis a couple weeks ago, we just make this continued push to the downside, probably with something more like a little push up here into this imbalance and test the bottom of these candles that took us higher and to drop, and then we'll take another drop to the downside. So this is on the euro daily time frame. If we do drop to the 4 hour, again, we can look at that imbalance that we had here and in here, these marked in gray. These were once again just barely tapped this past week, and we flush. So this imbalance that are carried out to the right have really, along with the monthly gap down, have been depressing price here for the last several days and weeks. When we look at the pound, though, I'm going to switch back to a daily chart. When we look at the pound also struggled to get above this daily volume imbalance. It wicked just barely through it. It wicked into it. And so we were looking at some weakness on the pound to carry it higher last week. But again, that narrative is completely out the window. So we can delete all that. And so this was partially right. And then it just continued. So we could take those out. All right. So here, yeah, the pound had a nice run down, and this was consistent with our analysis 2 weeks ago, where we thought dollar will continue higher, pound and euro are going to continue short, and that is what happened after a week that scared me out. All right, so here we have the pound, and when we contrast that with the euro, euro showing a bit more strength here. But there are these nice lows here and this low that are pretty much ready to get taken out. So with the absence of a lot of USD news next week, there's certainly just the opportunity for a continuation here all the way down. We've just started to, I'm going to I think we can be looking at a push up and then a run down. So if we're going to see quick push up and then a push down on the pound and possibly continue on to attack this low. So here's our main primary dealing range here. We've tapped the 75% of that dealing range right at this level twice over the past 2 weeks, and we have not been able to get above that gap up, which is right at the 75 level. So this tells us this dealing range is pretty much what we're dealing with. We won't be looking too much beyond it. So if the pound does pop up here to take out this double top at the 75%, which I find unlikely given the rejection that we just had, I'd be looking to short again up here. But I think we're probably just going to see a bit of a retracement to the bottom of this range and then take a tumble. So if we want to measure that range from this high to this low, okay, 75% is right where we kind of took the dive off the cliff. 618 is right at the bottom of the candles that kind of gave the last oomph to the pound before it took off to the downside. So there is a chance here that we would look for a retracement above the 50% mark of this dealing range. So we've dropped now, closed below it. Unlikely that we just continue to flush, but again, possibility that we just flush. I do think we will see a run above the 50% mark, probably into this gap, if not a little bit higher to the 618 to tap this body. The 75 would be a certain short in my book. If we get to the 75 here, then I will definitely be shorting the pound here with a stop above, probably halfway above this high, or halfway into this wick. We can draw this gap. So we had a close here and an open here, and we can pull that out. So this is where we could be looking at anything above premium. So anything halfway above this gap is technically okay for a short by the rule book in a premium. We can see that the midway point of this gap is above the 50%. We do have another gap over here in premium that isn't particularly large, but it does fall above the 618 and it overlaps nicely with this gap on the downside. Whoops. With this gap that came down. Okay. So we can see that there might be a little extra premium built into that above the 618 if we were to double top in there. So it's possible that the pound, after this nice run, we could have a if we have a swing, this is a swing point, so if we break, we tap, and then we consolidate and then double top up here for a flush, we could see that. We could see it happen rather quickly. It might tap and then form a double top in this region and take a dump. So that's what I'm looking at for the pound. That's also what I'm looking at for euro. It hasn't come down as far as the pound, so I do see it's still more this scenario playing out, where we're gonna come back in and probably tap some, maybe this imbalance in here briefly on the way back. So if we take a measurement here, right, we have already wicked it once on the way up, and there isn't really an imbalance here on the daily time frame to look at other than down here. If we zoom in to the 4 hour, we can see we do have an imbalance up here, and this was the daily imbalance from the bullish imbalance here. So we could certainly, this looks like a balanced price range to me. We've come down, we've come back up, so I wouldn't expect it to get too much above this candle's body right here. That would be my point on the euro, where I'm looking to short with a tight stop because I don't think we need to dig into this balanced price range too much here. we've already come back down. We opened, dropped in, took the bodies, wicked into that 4-hour gap before, and then started to flush with an imbalance here. So that's my analysis on the euro at this point. I do think we'll see a little bit of a retracement, probably revise this up to here. It would make sense if we could take this liquidity out with a couple wicks, but the bodies are going to stay down here, and we'll see a run to the downside. We can also keep in mind that what we've seen here, right, is the euro made this nice high and then a lower high, and the pound, however, actually made that same high over here, but a higher high throughout the last week, right? So there's a higher high on the pound, a lower high on the euro, which is a divergence, smart money technique, smart money tool for, and the dollar did not make a new low. So the pound was showing the manipulation with the higher high, and the dollar took off, and the euro and the pound followed in suit. For gold here on the 4-hour time frame, actually we'll switch to the daily. So again, last week actually was a bullish week, which I didn't quite expect, but I probably could have, looking at this structure now. But we had the bullish run up here, and we thought, okay, maybe this is the last chance to get into the metals cheap. And that was proven wrong, which I think is fine, because 2 weeks ago I really wanted to see price come back down here, finish a market maker sell model to wick out these bodies and be able to snatch up some gold at much lower prices, like 41.50, possibly even lower. So I can turn on the drawings again here. So daily wise, I was hoping maybe we could come down here, and it looks like we might be trying to do that. So I thought we could push up, push down. Next week we'll have a little run up and down. So actually this scenario is pretty much playing out from the analysis that we did prior. And for me, that's good to see. I think I wanted to, most people were starting to get bullish metals again, and while, yeah, I mean, the market does what the market does, and it might try to trick us into something long for the metals right now. And yes, while I don't say they're particularly correlated, the dollar rising, oil rising, and with potential more transit issues for metals, you know, transportation, it's heavy, and there's plenty of it throughout the Middle East that needs, you know, free passage or safe passage around the globe. So from that perspective, gold is maybe less sought at this point for a, you know, the coming month or 2 or 3, who knows. But if people can't get their hands on it, the price is going to probably have to drop. If they can't transit it, even if the demand would be high, if they can't transit it, then ultimately the demand would drop, and people do not necessarily want gold until they can get their hands on it at a much cheaper price. So on a daily basis, it looks like this might be playing out here. I don't think we're quite going to see super sky high prices anytime recent or anytime particularly soon, which is fine because I'd like to accumulate more at lower prices. So I think we could be seeing something like this happening, which is favorable for the analysis 2 weeks ago and right on point. So here for me, actionably on gold, 4-hour time frame, where we have this dealing range here, and I'm going to zoom in a bit now so we can just get a better look at the chart here. What I'm noting interestingly on dealing ranges is that, so from the current one that we have from low to high, so I've marked that here, and the previous one that we're dealing within right now, okay, we've come back above the 50% mark, and we consolidated a bit, and then we broke back through it with a pretty strong displacement right through the 50 mark right here, okay, with this candle. And then we've certainly traded down into a bit of a discount, double bottomed right where half of this smaller dealing range is from this low to this high. So that smaller dealing range, we've come back exactly to the halfway point, and we bounced off of that, consolidated in a bit of a premium at the 75% of this smaller dealing range. But on the bigger dealing range, we are right at the 50 mark. See that 50 mark line? And we have not closed the body above that all week. We've wicked through it a couple times, but we're consolidating in a premium of the lower dealing range, and we are not able to close a 4-hour candle body above half of the parent dealing range, and then we flush. So this continues to look bearish for me right now. We haven't closed below the 50 yet, but what I would expect is either a gap down through it, or we possibly push up, consolidate, and then drop again with a nice displacement like we did through this 50 mark. Okay, at the smaller dealing range level, if we gap below the 50, I would consider that a displacement, which would probably get filled, wicked up here, and then down. So we could see it with a gap down on Monday. Or if we do consolidate, I'd like to see a wick up and a displacement through this 50 mark, just like we saw here on the parent dealing range 50 mark through here, where we consolidate a bit in the premium zone and displace. Come back down, consolidate a bit in the premium zone and displace. Okay, that's what I'd be hoping to see in gold. So if we keep drawing, we're either gonna gap down, and then we're gonna hopefully do something like this. Okay, or if we don't gap down, we could see a consolidation here, and then I want to see this, and then a test, and then down. So for gold, I think we're going to be looking at either a gap through this or some kind of displacement move through this 50 mark of the lower dealing range. If we don't see that, okay, if we actually start seeing a move that closes bodies up here, if we start seeing closes up here and this 50% mark actually acts as support for a time, then we could be looking at a bit more bullish into more of a premium up here before we flush, or possibly not flush at all. But if we did see that, right, then we might be looking more at something like this, where we do take this high right here, we get into this premium between the 618 and the 75%. There is untapped imbalance up here with the bodies of the candles waiting to maybe be touched at a 10% above this dealing range, for example, and then we go down. So there's a couple scenarios. I'm not particularly seeing this scenario play out, but if I do start to see, if this, like we already inverted this gap up and closed back below. So if we are going to invert this again into the upside, it's possibly going to turn into a bullish run on stops above here, because this is fairly smooth, and we have premium up here that we could tap into on an imbalance level. So it's not out of the question. If I'm seeing some bullish action here, I will expect this to just make a quick run for all these stops and then want to turn around. Otherwise, if we do displace through this 50% mark, we're almost guaranteed to be attacking this low, these lows, and this low over the next week, possibly two. And then we will start looking for potentials for a reversal, I hope. Otherwise, gold could be in for a slide further below. This looks somewhat low resistance. If we do end up really dumping, there's a lot of room to the downside, of course, because we had this huge run up last week or last year. But I don't necessarily see, if we draw a bigger dealing range, say like from here where the last bit of liquidity was taken to the top, right? 75% is here, and you know, if this already hit a turtle soup level of 0.886, so if we just take that again, that could be this big break, tap, double bottom for the next leg to whatever, 8,000, 10,000, which would make sense given if we have a swing break and then a tap and this double bottom that digs really deep into, you know, this was a weekly imbalance before. So if we do see a nice big monthly wick again and close back above the 75, or maybe we just tap the 75 and 25% of this dealing range that we were just talking about, that, you know, would start to give more bullish signs for gold. But for now, I'm still a bit bearish on the gold side and the metals in general. One of the reasons for that too was that we could see, so silver did take off but then actually just went back to the downside. Copper on the other hand also started to rip, but then definitely reversed that this week. So we did take this high on copper, which I thought I wanted to see, and as soon as it did that with this wick, I thought, okay, we actually are probably bearish metals. When copper made this run, and gold really just lagged. I mean, it didn't do anything. Copper took this high, gold did not. Silver took this high, right? Gold did not, and copper took that high and then some, and then is on its way down. So there's certainly room for copper to come back here if we're expecting gold to drop. I think copper can start to make more of what this run that we were looking at last week before it actually takes off again. But this was a nice run on stops here at this level, and then we are starting to take a dive. Silver, yep, started to run up, ran into some resistance here. Ultimately, right, this double top sure looks like it's going, whoops, is that what I want? Yeah, this looks like it's forming a double top here that is just going to get run out at some point, right? So silver, while it's making this move down, I see this as the start of the next order block, potentially a breaker block, right? Depending on how much liquidity it takes from here. This looks like the start of a run on this accumulation here. So if we have, this is a show of strength in B, this is a secondary test down, we have a creek, we have a break, then we're gonna spring here, and then we're gonna break this high because it's made with a double top here, engineered liquidity. So we're gonna come down here, rip everybody out, and then blast higher, and then pot retest, and then we're up. That would be the Wyckoff schematic here if we're looking at this as an accumulation. So we have our entry into the range, we have a test, a show of strength in B, secondary test, a creek, I guess. So we break above the creek, and then we're gonna wick down here to take out all this weak buy side, buy people that have bought for sell side liquidity, and we're ripping down here, and then we're gonna run. So for now, I'm gonna delete these. We have this nice double top. What I'm seeing is a continued flush on silver to take out all the weak hands that got in here, thinking that's the bottom, and then we will break this high, this pair of highs, possibly this high with it, and then we'll retest the range. Whoops. Retest the range. It might come deeper into it depending on what kind of imbalances we leave in price here. So it could come a bit further and then up, or it could just have a shallow tap into probably this area and then up. So I'm starting to see this as a quarterly manipulation on the metals, down also on gold, right? So I think we could be seeing this drop. We'll see which one, if gold doesn't take this wick, and silver's wick looks a bit shallower, so silver will probably take it now, is what I'm guessing, based on this run up and this run down. If we project a fib down, let's say, if we project a fib down from that run up, one standard deviation right there. So that would be a one standard up, one standard down, which would take this wick, drop into this daily imbalance over here, possibly tap the top of that candle. Maybe not, unlikely. We'll probably just tap into this imbalance right at one standard or so, and then start a run up. So that's what I'm looking at on silver, and we'll see how that plays out. Copper isn't going to come all the way down here and take this low, I don't think, but it's possible, right? I do think copper is going to be definitely taking these lows into some of the imbalance here. We do have this gap that happened, and I already have the lower gap here in gray outlined, so this gap kind of overlaps on the top of this one, which is that fat gap down. So we have just tapped into the premium of that gap, and we've shot above it. So there's another chance that we come down, and we probably just dig through this imbalance a bit, maybe tap the top premium of the big gap down before again. It's possible again that we get to the 50% of that gap if we grade it. Maybe this low doesn't hold, but then I'd be starting to look for reversal. So this is still intact. I mean, we'd started to rip, but we're definitely starting to correct now. So what I would like to see now is still a continuation more like this. If I just move these over a week, I think we could start seeing something more like this, where we get, so this kind of started to happen, but we've rejected. So I think we're coming down, a retest, and we'll see how deep into some of these gaps we do get on copper. If we do break below this low, I'd look for a pretty quick accumulation at the 5 1/4 level before another rip. But at the same time, we'd want to look at where gold and where silver are when and if copper is doing exactly that, if it is doing that. So that is the outlook on the metals. A quick look at soybeans and soybean oil. So the commodity side of things, again, we had this range. Last week we thought it's possible that we could come and attack this liquidity here before pumping higher. We kind of did that. We took last week's high first and then started a dump. So while generally intact, this is going to be more of a continued, we're definitely attacking this liquidity here before we could get another run up, if we even get another run up. But here's why I think we should get a run up. We have this engineered double top here that it's obviously rejecting from. So we've certainly had this swing here. So we've swung up, we've broken, we've tapped, and this is a tap, a long tap. And then we've not quite broken that. We're coming back for a double bottom, and then a shot through is what I'm seeing on soybeans, at least for now, because we also have this nice even liquidity here. So this is all very close to a nice quadruple top level, and we could certainly just see a run back down here to get some fuel before we blast off. So that narrative looks to be still intact for soybeans. Soybean oil had a bit more of a consolidation week here on a daily time frame. This high is still very suspect. It's possible it holds, but I would expect if the commodities like soybeans are going to do what we saw, then soybean oil itself could probably mill around here, maybe take a little dip for the beginning of the week, and then when soybeans are going to make a run, they could do this. I'm not huge into trend lines themselves, but if we just eyeball this here, right, we could see something more like down in this area. Maybe this imbalance gets tapped, or maybe it just wants to come in and get a few of these gaps that we've gotten here before it also takes off. There's not the same level of a double top here as we saw in the soybeans themselves, but these are some nice equal highs that could get run as it travels higher. If we are starting to break much below this trend line, And I mean, trend lines do hold for a reason. People can draw them because they exist, and they do actually, they themselves don't support price, but they are a reflection of where price is finding support. I mean, any chart, you can really pick a trend line, right? And then they get broken and things like that. But this is where, even on this chart, if you're drawing something silly like this, maybe that's an indication of how deep this retracement can go before it launches out. And if you apply a more technical dealing range to that, for example, right, if we want to see a tap below 50%, which is what we should see, we should get into a discount of this range before we break it now, if we haven't broken it already. And this trend line would almost signify to us that we expect something much deeper here, to maybe the 618 level of this leg, right? And if we take the entire dealing range from there to here, right, this is at the 50% of this entire dealing range. So the 618 here aligns with the 50 of the larger range. So this trend line, for example, would start to hold up again by virtue of coming into a discount and hitting, or coming into a discount of both of these dealing ranges for soybeans before actually flying upwards. And if we take a look at a couple gaps in here, right, so there is an imbalance in here that was inverted and may become the point of support here at the 75% of this dealing range. So that's where you might see a wick through, right, this lovely trend line, or I drew it so poorly, it's more like this, right, if we're eyeballing it. So if we are to come all the way down to a discount 75 and almost 618 level and into this balanced price range, because we went down, consolidated, and back up, this is a balanced price range. I do not expect price to drift below this gap. So this looks like a long way, and it could be, right? It's definitely had a good upthrust, not breaking that high, leaving engineered highs. People are thinking, okay, this is the top, so it definitely could stand to come all the way down here and test the discount of both of these ranges before we get another pop. Just for giggles here, if we take a fib on that manipulation, that's 2 standard deviations down. So there's certainly a chance here that we do just come all the way to the 2 standards, right, wick through that gap and then head up. So oil, I had the continuous contract up, and I haven't really touched on it that much in our weekly recaps so far, but this was the basis for my shorting equities and thinking the metals were going down, and possibly even the currencies this past week. Looking at so I've taken off the continuous contract. This is now just CLN, the current contract that's been traded, for a good bit with decent volume here, right? And so once we had come down and tapped the top of this range and wicked down, and now we've rejected off of that, we actually had, not that, I want this, we had this gap that we have now traded back above. So we've taken liquidity, run into the middle of this range with some wicks. The bodies have pretty much stopped at the top of this range, and we've started to continue higher. So on the daily time frame, I was basically long oil for the last 3 days. I was a little early on this one. It came down a lot farther than I expected on Thursday, but by Friday it had certainly shown a willingness to continue higher here on the continuous contract. So that's on the CLN contract, and I do see this just because there's nothing prior, and there's not a lot of data that we can look back and say, okay, but this high is definitely going to get taken out, it looks like. If I'm going to switch back to the continuous contract here, okay, so we have this double top. We had a week gap in here, which went exactly to 4 standards. We came back and we tapped exactly. Okay, so here's why I was so bullish oil on the continuous contract daily time frame. We have this dealing range from this high, to this low. Okay, so this is our dealing range, which I've marked here. And we have the 75%, or the quarter of that, the lowest quadrant, just getting wicked by this candle 7 days ago through this imbalance, or through this gap, right? We took liquidity here and we wicked down to this 25% of this dealing range. We wicked again, but we couldn't even get as low. We got as high as this candle body right here, and we rejected, right? We had a gap coming down over here that our bodies have not closed below. So we started to reject up, and now we're back above the 50% of this dealing range. So when I saw that, we exploded off the 50% mark, and then with the contract shift, we gapped down according to the roll. I forget exactly what the futures term is called. I'll have to look it up again. But with the discount that goes with the future rollover contract, we gapped exactly to the 50% of the continuous contract, and then just plowed up. So we were almost assured to close that gap, it felt like, but that also is, if we go back to the CLN contract, right, there is no gap down. So looking across the concurrent contract versus the front month contract, right, there was no gap down. So we're seeing this bullish action, and so when the continuous contract, quote unquote, gaps down right to the 50% of this dealing range, we can be pretty sure that that gap is going to close. This high is going to get attacked, and we aren't showing signs of slowing down in the Middle East, so this double top is definitely in question. So we didn't get too much into it, into detail last week on oil, but this week here's a little bit of a deeper dive into exactly what is going on with crude oil and why I was long for the majority of last week. On indices, so I have ES here, and we had a big sell-off day on Friday, which I was anticipating a bit. We haven't pushed up quite as high as I thought we might to the 2 standards off of this run down. So if we're measuring this run down, it would be typical possibly to see a run up to the 2 standards, and we're kind of maybe rejecting. It's too wishy-washy here on the 1.5 or 1.618 on the extension leg here, but you know, it's possible that this is the top here. If we did take a more in detail dealing range, I'm not going to the 1 hour. If we took a more detailed dealing range here on a 4-hour basis, right, if this is a dealing range, if this is in fact the full dealing range, right, I'm starting to see levels that make sense, and here's why. We have 75 okay, it says 75, it's the lowest quadrant, right? We have we have most of this consolidation that ran down before running up, and there's basically a launch point from this gap and up. So that says to me this is the final breaker block initiation from this 75% level in the lower quadrant of this whole dealing range. If this is the whole dealing range, we kind of launch from there. And then we find some support at 618. We blast through the 50, where a lot of these bodies aren't. I mean, we had this gap down through the 50 before, and now we've gapped or imbalanced up through the 50. Found wick support at the 382. We pushed through the 25, and we've also then launched from the 25. So there is more confluence here to calling this an entire dealing range than what I've seen in the past. Let's say we do it on a daily time frame. Right, so on a daily time frame, this looks even cleaner. So from the 75, we have the beginning of the red candles down to the bottom. So that is exactly what you like. The 75% is either going to align with a nice gap or with the breaker block that starts the run. So typically, and this is right on top of that candle, it runs down, we come up, and then we break through it with, essentially, we gap up from it. So that's good to see. And then we have another gap here, and then an imbalance through the 50% mark. Okay, so an imbalance through the 50 is also a sign that you're breaking into the premium end of the range. We've broken above the entire range that was established here with some nice smooth tops. Okay, then we've wicked down to the 382, which on the other flip side is the 618, and then we did get a close above the 25 or the premium 75% level, and then we launched from that to the apex. So this is starting to show signs of a completed dealing range, and I put this measurement here on I anchored it somewhere in the lower time frame, and it ended up being 4 standard deviations at 75, 38, 75, and here we top out at 75, 40, so within a handle and a half. Is this the start of the turnaround? I'm starting to think so. We have run up to what completes a logical dealing range narrative in my perspective. We ran up and we just completely rejected that straight down through. So now we have this gap that took a bunch of people into the market on stops, and then we've reversed that, and now we have an inverted fair value gap. We have not seen that on this entire run up on the daily time frame. So last time we saw that, right, was here on the run down and the run back up. Here we see it a run up and a run down, and we have now a gap that has been inverted. So I do see this as the top of ES. It doesn't have to get all the way to the 2 standards mark up here. That's just a guideline, right? If you measure this range, 2 standards is up here, but actually if we don't take this manipulation leg, and if we did it more from the bodies of, say, the range, where's 2 standards? 75, 34, 75, which aligns almost exactly. So if we kind of neglect this last run down on stops and we do it from more of the bodies of the range that was established here, and then we disregard this stop run, we have almost exactly 2 standards measured to the handle. So it's very, very compelling that this is now our dealing range, and we are going to be trailing off from here. So again, I am long puts, which means I'm short the SPY, the SPY index, right? So I bought them a little early. I was in here. I had to watch them go negative for a week. They're almost break even now, a little bit underwater still, but again, it's insurance against a pretty hefty drop that I'm seeing here on the NASDAQ as well. So I've done this the dealing range drawing also, and so again, the 75%, the lowest quadrant, starts at this candle basically and drops us to the bottom. We imbalance, have a nice buy side imbalance through it, and then we also have a imbalance, and we just close straight up through the 50%, which is kind of right at the top of this range, and we also imbalance through the 25, and now we seem to be at the apex. This one, NASDAQ, has less of a clean inverted fair value gap. I don't actually see, maybe there is a gap here. We got to zoom way in to see if there's a gap. There's not a gap here on the daily time frame. These overlap, so there's not a gap here. On a 4-hour, there is. So not much of one, but there is a 4-hour gap here. So there is a potential here that this is not quite the top of NASDAQ or ES, right? But I'm going to continue to play it short. If we exactly on Friday, what I wanted to see was this wick, not wick. I mean, I was short from up here at the beginning of the day. Where did we start the day? It's 1800. So I was short just below the 1800 price here, expecting a pretty red day. And we did that until 10 o'clock New York time. We had this big push up, and we took the London high right here. This wick is the London high right here. And once we had this big push up, because I was waiting for a big green candle to actually rebalance some of this price most of the day, and I thought we were going to see it from 6 a.m. to 10 a.m., but no, we saw it from 10 a.m. to 2 p.m. New York time. And it came up here, and after 2 o'clock, it wicked up right above that London high into this imbalance, and I was short. And I was like, this is textbook short, and I wrote it all the way to the close. So, yeah, I've been waiting to short the equities for a while, and again, the last couple weeks I've said I'm not really touching them because I've been waiting for what appears to be a compelling case to form the top of the dealing range. So here, we look like we have started, right? We had a run down into the imbalance. We come back up, leave a double top, retest, take all that liquidity, run one more time, and then we've displaced downwards below this low, and we have not closed the body above it. We left this imbalance on the way up that we have run straight through on the way down. So on NASDAQ, these highs, if you look on a lower time frame, they are, let's say, a 30-minute time frame. That looks a little suspect to me. It's too smooth almost, right? So on a 30-minute time frame, if this is one more, like this was an M, right? If we have one more W forming here where we have a up, down, and then up, and then down, right? So I could see that happening on the lower time frames. ES took this low, YM took this low, NQ has not taken this low yet, or even this double bottom here. So there is a chance on the NQ that we come back up for this liquidity one more time, and then we're dumping. Or we can follow what YM and ES have been doing and just decide, yep, we've had our top and now we're headed down. So that's on the equities. I am seeing this as pretty much the top. Do we call tops? Yeah, maybe. I try to. I mean, honestly, that's why I have all these dealing range fibs and things that I draw, and why I take the measurements that I take to be able to anticipate that this is the top, and I want to be going short now. I'm done longing. I've been done longing since about here, but I don't expect this to go any higher, and I've seen signs now where we have begun the run. So we had NFP, and now we've had CPI, and it's a relatively light data week. We could just see these start to tumble, right? And I'm expecting quite a dump. If the dollar is doing what it's doing, and if the dollar is going to actually start making a run to leave this range and attack all this buy side liquidity like it looks like it's doing, then there's really no room in that for the stock basket to continue its what I see as the blow off top run, and it's gonna really start targeting lower. So if we are to take, like we did, a measurement on the bodies here, or even this NASDAQ actually went to a full standard, almost to the tick, right? Look, so low here, high here. Got to give you a better view of that. So this one, if we did include the stop run, right, it goes right to one standard. ES didn't go as high, and ES doesn't move as much as NASDAQ, so we did take the bodies of those, and we were roughly at 1 there, and this is at 1.5. So again, even nice numbers that an algorithmic price delivery engine would try to hit, right? If we take this entire range, including the stop run, we are at 1 standard exactly. So another confluence as to why I believe this is turning into the top of the equity indices. Couple that with the YM that just did not break a new high, right? So we have a divergence. YM could not break a new high. ES clearly, NQ clearly huge new high, and YM just could not do it, right? 3 drives, like it made a high clearing this dealing range, so the market maker buy model cleared those stops, and then it starts to push. Oh, can't do it. 1, 2, 3. We took that last little high there right into wicking. Yeah, we wicked that body and then dump. So all that confluence together makes it very bearish on the indices for me, and I will be pretty much only looking to short them. I have current long in oil, and I have the puts on the SPY, and I'll be looking to day trade the equities to the downside. Last not least, Bitcoin. So Bitcoin's an interesting one. We have consolidated a bit. As expected, we are a little bit bullish, but now with the dollar starting to run, the currency starting to drop, oil running, metals dropping, indices looking like they're going to start dropping, and we've hit a premium of this past dealing range. Bitcoin, on the whole, I'm bearish. I think I just outlined this as a supreme bullish case last week that, I don't see it as bullish. A lot of people on social media are saying this was the bottom and now we're headed for all-time highs. I disagree. So this case that I drew was just entertaining that possible narrative, but I don't believe that is what is happening. So I didn't even think it would happen. I was only slightly bullish, maybe to a premium of this dealing range and this dealing range, as if this were the dealing range to go back down to 40,000, right? Or even 25,000. So on a weekly basis, right, we have now engulfed this candle. So that doesn't mean we're going down. We did have a bit of a run up, just barely, but mostly Bitcoin's been dropping, and we are in this imbalance. We're in a premium. We haven't hit 618 yet, but we don't have to. If we're that heavy and we're actually starting, if we're starting a second stage distribution of this market maker sell model, right? So we have an initial consolidation, a run up, another accumulation, first stage, second stage, smart money reversal, and first stage of distribution, and now we've run up into a premium of that leg. There's nothing that says we have to hit 75 or 618. It's what we would like to see for a very low risk short, which is what I was hoping to see, but everything else just sort of got a lot more bearish. So Bitcoin has engulfed that in a premium, and we've now closed back below the 50% mark. So I am seeing this as bearish, and I'm following more of this narrative now. I thought we were going to consolidate a bit more before coming down. And once we've cleared these lows, yeah, who knows? I mean, this could be a few months out. It might start taking another run up. On the super bearish case, we can get down below these at 24,000, right? One standard measurement of this dealing range is down here. A one standard measurement of this dealing range is at 5,000, which would make a lot of people really, really mad and upset. But I see at least this market maker sell model finishing off to the 25% of the parent dealing range, clearing out all these stops and an imbalance to balance down here. So we're in a premium now. Looks like we've rejected and closed back below that, so we can reverse these arrows. I was only bullish short term to get, to get into a premium here, and now we certainly look like we are ready to head this way. and then maybe turn around, maybe not. So we can leave that for future analyses, but for now, Bitcoin, my targets are below these lows, and I closed the window, so I I was in the top 10% of the leap competition for the 2 weeks of the Bitcoin, and I can show you that if there's a comment saying please show us, but I don't know if any of you make it this far in these videos, but for now, if you leave a comment saying please show us the leap data that you're in the top 10%, I will do so. But I ended up with like 5,000 or 6,000 in profit, and that was good enough for top 10% out of, I forget how much, 40-some thousand participants. So that will do it for this week, and I'll try to get in midweek if I can. I really wanted to this week, but there was so much action and so much going on. I did not get a midweek update out to what we were looking at to say, hey, yeah, it looks like we're reversing everything that we talked about last week, that the dollar is going bullish and everything else is going to tank. So there we have it for this week. Thanks for watching, and if you did get value out of this, like and subscribe, and we will meet up again in the future videos. Thanks.